Welcome back to the channel. This is Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. Make sure you guys like, comment, share, subscribe. Share this with 100 people and hit that bell for notifications because we got new videos dropping every day, 4 p.m. Eastern Standard Time. And make sure you download MG the Mortgage Guy show wherever you listen to podcasts, audio, Spotify, Apple, wherever. Download us, okay? And then go to mgbookstore.com today. Go to mgbookstore.com and buy some books. House Economics, you got the Real Estate Investors Manifesto, and we got another 10 more titles releasing in 2023, God willing. So make sure you guys tap in with mgbookstore.com. So let's talk about today's topic. We're going to talk about student loans. We're going to talk about you guys buying a house when you have student loans. Student loan calculations has really hurt a lot of people over the past couple years from being able to qualify for a home or even qualify for the home that they really want, just because the way lenders had to calculate if you had, income-based repayment plan or your loan was in forbearance. But there are new guidelines that came about this year, and I just wanted to make this video for you guys out there who have a lot of student loan debt or even a little bit student loan debt. That way you guys know how you can get approved for a house or a mortgage, I should say, in 2023. All right, so let's bring up the slides. We're going to give you guys some visuals, so make sure you screenshot these slides and you rewind this video. This is going to be a quick video. All right, so first things first, let's talk about FHA loans and what their rules are. First, FHA uses the payment that is listed on a credit report or your student loan statement. But if the loan is deferred or forbearance, the lender will have to use 0.5% of the outstanding balance. All right. So here's a couple examples of how your student loans are calculated per FHA guidelines. If there's a payment on your credit report, let's just say you owe $200,000 in student loans and your credit report shows that you have a monthly payment of $300. The lender will use the actual payment that is documented on your credit report. Now, if you don't have a payment on your credit report, let's just say you have a balance of $50,000 and the monthly payment is $0, the lender will use $250 as the payment when calculating your debt to income ratio. All right. And let's go to slide 2 because I got a couple more examples for you. Now, let's just say if the payment is $0 on a credit report, let's just say you owe $70,000 in federal student loans and your credit report shows a monthly payment of $0. The lender will use $350 for your payment amount unless you ask your servicer to recalculate your monthly payment due to a significant change in income or family size, right? That's typically an income-based repayment plan. Guys, go out there. I highly recommend get yourself in the IBR if you are able to, so that way you can get a low payment. That way, you can qualify for more for a house. Now, if the loan is in deferment, let's just say if you owe $100K in federal loans and your credit report shows that the loans are in deferment, the loan officer will use $500 as your actual monthly payment unless you can get a payment schedule from the servicer showing a loan payment amount under income-driven repayment plans when it's deferred. So it's the same scenario, right? These IBRs are helping a lot of people qualify for mortgages, and these are new guidelines, right? And these new guidelines is making it easier for you to qualify for FHA loans. Let's go to the next slide. All right. So here's a couple key things I want to remind you guys of. FHA guidelines prohibits people from getting a home loan if they have federal student loans and collections. They'll need to first get out of default, clear the caveats, which is the database that tracks collection accounts that are owed for this federal student loan. So long story short, if you're in collections or you're in default, you ain't getting no FHA loan. So make sure you clear that up. And once you clear it up, it's real simple. You just tell the people, hey, I want to get into a repayment plan. They'll take it out of default status and they'll put you in a payment plan, and then you should be able to qualify for a loan. All right. There's no similar database for private student loans and collections. If the debt is still showing on your credit report, it will be included into your debt to income ratio, which means you'll need to establish a payment plan with the creditor or collection agency. If the student debt is no longer there, it likely won't affect your chances of having your home loan application approved. Right? So these are a couple quick things that I wanted to go through. Very important information for everybody out there looking to house hack their life away with a 4321 using an FHA loan. If you have student loans, even if you're looking to buy a condo or your primary residence, regardless of what, if you're looking to use an FHA loan and you have student loans, these are the guidelines that all lenders will use. Now, some lenders might have overlays. Overlays is when they have guidelines on top of what FHA is requiring or conventional is requiring. So make sure that you guys please check with your lender. And if you have any questions, again, you can always work with me and my team. Go to applywithmg.com and you can set up a consultation and work with me and my crew, and we can help you. And the link will be in the description as well, so that way you guys can apply or book your consultations. Now, let's talk about conventional guidelines when it comes to student loans. Let's go to the conventional slide, Tooks. All right. Now, this is for Fannie Mae and Freddie Mac. They both are similar when it comes to how they view student loans, and it's pretty cut and dry, right? Fannie Mae backed conventional loans accepts the monthly student loan payment listed on a credit report or account statement. If the loan is in deferment or forbearance, the lender will use either 1% of the balance or the monthly payment. With Freddie Mac backed mortgages, allows borrower to use either the payment on their credit report or the student loan statement. If the loan is deferred or in forbearance, the lender must use a half a point of the loan balance to calculate your debt to income ratio. Now, in this case, if you are in deferred or forbearance status, try to get approved for Freddie Mac, because you see they only using a half a point to include into your debt to income ratio versus a full percentage point that Fannie Mae is using. So if you have student loan debt and you're looking to do conventional financing, again, ask your lender, are you going with a Freddie Mac backed conventional mortgage? Because that's going to be more lenient for you and help you get approved for more money because of the way they're calculating versus Fannie Mae. So again, screenshot this, ladies and gentlemen, so that way you have this information, and that way you know what you're talking about. Yep, Tooks just moved me out of the way so you can get the full screenshot of this. So when you're speaking to a lender about getting pre-approved, make sure you're talking about your student loan debt as well. All right. So that's all I got for you guys. This is Matt Garland, NMLS number 58700, but better known as MG the Mortgage Guy. Peace.